What are the challenges in pricing global Sukuk bonds? Have you ever wondered why pricing global Sukuk bonds can be so tricky? The unique nature of Sukuk, which are Sharia-compliant financial instruments, presents a range of challenges. Let's break down some of these hurdles in a straightforward way. First, Sukuk representing ownership in underlying assets or projects, unlike conventional bonds that are based on debt obligations. This fundamental difference makes pricing complex. Sukuk can be structured as asset-based or asset-backed. Asset-backed Sukuk guarantee returns from the underlying assets, while asset-based Sukuk relying more on the issuer's creditworthiness. This distinction can confuse investors, especially if they are not familiar with these terms. Next, we have Sharia compliance constraints. Sukuk must follow Islamic law, which prohibits interest, excessive uncertainty, and speculative activities. This limits the types of contracts that can be used, affecting liquidity and pricing transparency. For instance, Sukuk must be backed by tangible, revenue-generating assets. This means that pricing must consider the asset's value and its income generation potential. Valuing underlying assets can be another challenge. Unlike conventional bonds, which are priced based on credit risk and market interest rates, Sukuk pricing heavily depends on the cash flows of the assets. These assets must be clearly defined and commercially valuable. Valuing assets across different regions can be complex, especially if they are intangible or in emerging markets with less transparent financial reporting. The legal and structural complexity of Sukuk also adds to the pricing challenges. Sukuk often involves special-purpose vehicles that hold the assets and issue certificates to investors. The legal framework governing these vehicles varies by country and can be uncertain. This legal risk complicates pricing, especially in cross-border transactions. Another factor is credit risk assessment. While Sukuk holders have ownership rights, many Sukuk are structured so that investors' recourse in default is limited to the originator. This makes Sukuk resemble unsecured bonds in terms of credit risk, complicating pricing further. Investors must assess both the issuer's creditworthiness and the value of the underlying assets. Currency and sovereign risk also play a role. Global Sukuk are often issued in various currencies, and fluctuations can impact pricing. Sovereign Sukuk must comply with both Sharia principles and sovereign debt regulations, adding more layers to valuation. Lastly, the market perception and investor base can affect pricing. The global Sukuk market is still developing compared to conventional bond markets. Differences in investor familiarity with Islamic finance principles can lead to pricing inefficiencies. In practical terms, pricing global Sukuk requires careful analysis of the underlying asset's value, the legal framework, and compliance with Sharia principles. Investors and issuers must collaborate with experts to ensure that pricing reflects market realities and Islamic finance rules. Transparency in asset valuation and the development of liquid secondary markets can help address some of these challenges over time.